video, we'll be going over IRS Form 8995A, Schedule B, Aggregation of Business Operations. So this is a schedule that supports the QBI deduction Form 8995A, and this relates to taxpayers who may need to aggregate more than one group of business operations. So most taxpayers that are just claiming the QBI because of one business line would never see this, but there might be other instances where having related businesses might make sense. And first, you have to determine whether or not you qualify to aggregate your business operations. And for that, we would refer to Treasury Regulation Section 1.199A-4. And that would be the aggregation part of the Treasury regulations. So there are certain aggregation rules. We're not going to go into depth on these. Just know that before you attempt to aggregate business operations, you do need to make a determination as to whether or not you qualify. And then if you do qualify and you choose to, you don't have to, then you would complete Schedule B. So at the very top, your tax software is probably going to generate your taxpayer name as it's shown on your tax return, and then your taxpayer ID number. So if you have more than one aggregated group, you can complete as many Schedule Bs as needed. The first one, and in this case the only one, we're just going to number it 1. So you're going to provide a decent amount of just narrative on all of this stuff, because what we're doing is we're taking these independent businesses that we've gotten information on from other sources, and we're going to combine all of that into one aggregate operation. So let's say the description of the aggregated trade or business and an explanation of the factors met that allow the aggregation in accordance with the Treasury regulations. If you hold a direct or indirect interest in a relevant pass-through entity that aggregates these businesses, then you have to attach a copy of those aggregations. So in other words, if you have a partnership, if you're that owns multiple trades or businesses, if you have an S corporation or some other pass-through entity that has already done that, then you need to take those aggregations and add them in here. So you could be part of a limited partnership that has multiple business interests and they choose to aggregate their business operations. So let's think of maybe a plausible example. So let's imagine that John Doe is a doctor and he's got his own practice, and he's also got a side business where that he owns an entity that owns the practice that he's in and also owns the equipment and leases it all back to John's business. And then that same business line also owns real estate in other ways, that leases them out to other doctors. So you could have John Smith owning some business that is his medical practice, and then you would have another business that leases real estate and or equipment to not just his practice but other doctors. That's relatively common, and he might meet the Treasury regulations determination that he can aggregate these because they're similar enough, and that's what he wants to do. So whether or not this is tax prudent, whether or not this was wise, is beside the point. If you qualify and you choose to do it, then you can. So let's just say John Doe has decided to aggregate his medical practice and his holding companies that lease real estate and medical equipment to his practice. John Doe owns 100% of all companies involved, and these businesses meet the Treasury regulations criteria for aggregation. Again, in this video, we're not making the determination that this would meet the Treasury regulations criteria. We're just simply saying that is something that you should do on your own. And once you make that determination, then you would write something that justifies it in item 1. And then in 2, you would answer whether or not this has been changed from prior years. And if it has, then you would say, okay, what happened prior, and then what is happening now, and then give a rational explanation. So we're going to say no, because otherwise we'd have to come up with some sort of justification on this hypothetical situation. So in real practice, if you did make this yes, then you would need to come up with a well-researched explanation that you would put here. So, and then let's just enter the information in item 3. So we've got Doe medical practice. We've got Doe medical real estate solutions, and we've got Doe's gently used medical equipment. Perhaps someone should give John Doe some advice on how to properly market his businesses, but that's not our judgment call. So each of these has a separate EIN, which we're going to just enter here. And then now we're going to enter the QBI income in column C. We're going to enter the W-2 wages, and then we're going to enter the unadjusted basis immediately after acquisition, or the UBIA. These are all items of income that are used to calculate any QBI limitations. So we're not going to go into any hypotheticals. I'm just entering items here to kind of fill the gaps. So these numbers have no basis in anything close to reality. I think doctors make a little bit more than that. Let's just say that he's kind of starting to grow his practice. And maybe he's got someone on the side that is managing his properties for him. Again, this is not reflective of any marketplace valuation or anything closely rooted to reality. These are illustrative purposes only. So in item 4, we would simply enter the totals of all of these. So in this, we've got 1,050,000. In this one, we've got 300,000. And then in this column, column C, we have 600,000. And then that would go on to either directly onto the Form 8995A Part 2 itself, so that we can start the calculations of any QBI limitations, or it would go on to Schedule C if you're doing loss netting, carry forward, anything like that. So that's how the aggregating multiple businesses or trades looks on Schedule B. And I think that pretty much covers it for this demonstration. So we'll put links in the show notes to the article that goes over all of Form 8995A plus the supporting schedules, as well as any supporting other forms that might be related, forms and schedules. So we'll put links in the show notes to everything, and we're in the middle of updating all of our content, so we'll update those links as we roll out the amendments to our content and new resources. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if you have any If you have any topics that you'd like to see covered in an upcoming video, please hit me up in the comment section. Thank you very much and have a great day.